guys, welcome to Talking Money with Nosy, personal finance made simple. Today I'm going to be talking about everybody's favorite topic. Well, maybe let me not say everybody, but most people's favorite topic, which is dividends and how dividends work. Firstly, what is a dividend? A dividend is cash paid to shareholders from a company's profits. The amount of cash paid out to investors is decided by a company's board of directors. Please note that not all companies pay dividends. If you are interested in investing for dividends, you have to specifically choose ETFs and stocks that pay dividends. How do you find dividend stocks? Well, there are many websites that you can use. Personally, one of the websites that I use is called Simply Wall Street. So if I just type here, I use it so often it just comes up automatically. Let me click there. The reason why I like Simply Wall Street is because I can search for dividend companies on any stock market, like the JSE in South Africa, the New York Stock Exchange in America, the Australian Stock Exchange, any stock market. So the JSE is the one that's currently open, and where it says market cap high to low, I can change that by using the drop down arrow and selecting dividend yield. Once I do that, it rearranges the list of companies and it lists them from highest dividend yield to lowest dividend yield. So you would scroll down from top to bottom. Let's look at the New York Stock Exchange. So right here where it says ZAR market, I'm going to change that and just type United States and just select. Again, it's going to list the companies from highest dividend yield all the way to the lowest. Now, when it comes to dividends, guys, please don't just look at the dividend yield only to choose your shares. There are more important factors to look at, which I'm going to mention towards the end of the video. How do you find ETFs that pay dividends? You go to EasyETFs, click here. This is an EasyEquities website. Then you select the Easy ETF Finder tab, and this is what opens. So currently on the JSE, the Johannesburg Stock Exchange, there are 94 ETFs available, but not all these 94 ETFs pay dividends. So you go to the left-hand side of the screen. This is the filter that you're going to use to find dividend ETFs. So where it says dividends, drop down on the arrow and select pays dividends. Another thing to select is the asset class. So these are the different types of ETFs to choose from. Do you want equity ETFs? Equities means shares. Commodity ETFs? Well, commodity ETFs do not pay dividends. So even if you select that, you're going to get zero available. You've got mixed allocation ETFs. What is that? Mixed allocation ETFs are ETFs that have got shares, they've got cash, they've got bonds. So it's a mixture in one product. And then there's fixed income and real estate and cash. Personally, because I am a long-term investor, I like equity ETFs because equities grow the best over long periods of time. So when you select that, you will have 40 available ETFs. Another thing that I like to do is to filter by expense ratio. So expense ratio is how much you pay in fees towards the ETF provider. And that fee is charged annually. And so the lower the fee, the better. So I just maybe drop it down to 0.5. Okay, so we have got 28 ETFs available. So from there, you can then go and learn more about the ETFs. So let's say you want to invest in a top 40 ETF. There are so many of them. There's this One Invest top 40, First Rand top 40, Satrix top 40. So how you choose is you need to compare the expense ratio of those ETFs. So let's start with Satrix 40. So you click where it says learn more, select compare. So I'm going to compare Satrix top 40 against FNB top 40. Here we go. And let's also compare it with the One Invest top 40. Here we go. So it compares side by side. The price of these ETFs are almost similar. That's not what you want to look for. You want to look for this, which is the total expense ratio. It says this is a measure of the total costs associated with managing and operating an investment fund. These costs consist primarily of management fees and additional expenses like trading fees, legal fees, auditor fees, and other operational expenses. So Satrix 40's TER is 0.1%. The FNB top 40 TER is 0.13%. And lastly, the One Invest TER is 0.29%. So of these three, I'll go for Satrix 40 because it's got the lower TER. There are three types of dividend payments. The first type of dividend is a regular dividend. Regular dividends are usually paid quarterly or twice a year, once a year, or monthly. Usually, the dividend is a set amount per year. The second type of dividend payment is a variable dividend. Variable dividends are also paid at regular intervals, but the amounts paid are not the same every time, and they depend on a company's earnings in the previous year or previous quarter. The third type of dividend is a special dividend. A special dividend is a once-off payment, and so you shouldn't expect it to happen again and again. A company can choose to pay a special dividend after an unusually profitable quarter, or after it sells an asset and doesn't need the money, or when they have accumulated cash over time that the business doesn't need. Most South African companies either pay dividends every quarter and some pay twice a year. Please click on the link on the top right hand corner of your screen to watch my video where I explained how you can create a monthly dividend portfolio on the JSE by buying different shares and different ETFs that pay dividends in different months. Next is the dividend yield. The dividend yield is a company's annual dividend amount divided by its current share price. For example, a company with a current share price of 100 Rand per share that pays an annual dividend of 6 Rand per share has a dividend yield of 6% because 6 Rand, which is the annual dividend, divided by the current share price, which is 100 Rand, times 100 is 6%. Here's a spreadsheet that shows you dividend yields of different companies and ETFs and how much you would earn per year if you invested 10,000 Rand in each of the different companies as well as the different ETFs. So this table is showing you the company or ETF, the dividend yield, as well as how much you're going to earn for the 10,000 Rand investment into each of the companies, right? So Clicks has a current dividend yield of 2.2%. That translates to a dividend of 220 Rand for the year. British American Tobacco has a dividend yield of 6.29%. That translates to a dividend of 629 Rand. So how you actually calculate it, you just take the dividend yield and multiply by the investment amount. So Truworths, which is 8.89%, take that, multiply by 10,000, the dividend is 889 Rand. You get it. So we go right all the way down, and let me talk about these ETFs here. So Satrix 40, the current dividend yield is 4.45%. That translates to an income in dividends of 445 Rand. Satrix Divi, yield of 7.95%. That'll give you a dividend income of 795 Rand. And then we've got Satrix Resi, which has a dividend yield of 7.46%. That translates to an income of 746 Rand. Now guys, dividends are not the same as interest that you earn from money that sits in a bank. I've had so many questions. People are like, if I invest in shares, what is my interest? And I say, no, shares do not work like cash in the bank. Remember I said that dividends are paid according to the profit that a company has made. So if a company makes a lot of profit, they can increase their dividend. But if profit hasn't been that great for the company actually pays out a lower dividend. Another thing that some people ask me is how much dividend income they can earn if they invest 1,000 Rand or 5,000 Rand or 10,000 Rand. As you can see, you just take the dividend yield and multiply by the amount of money that you are investing. You need to invest a lot of money to receive a lot of dividends. There's nothing for mahala in life, guys. So if you invest 1,000 Rand and you buy Clicks, just say 2.2% multiplied by 1,000 Rand. How much is that? It's 22 Rand. So what this is telling you is if you are young and you want to earn a lot of dividends, it means you need to invest your small amounts of money every month for many, many years. That's how you're going to build up the number of shares that you own, and the more you invest, the more dividends you receive. Let's talk about 3 important dividend dates. The first important dividend date is the declaration date. This is the date on which the dividend is declared or announced by the company. The second important dividend date is the last day to trade, or LDT. The last day to trade is the last day to buy shares or ETFs in order to receive the upcoming dividend. The third date is the date of payment. This is the date when dividends are going to be paid to investors. Let me show you an example of a dividend announcement. So I'm going to go to sharedata.co.za, click on where it says shares. You can search for shares over here. I'm looking for a company called Tradehold. So let me click on T. Then I'll scroll down to Tradehold. There we go. Click there. Once Tradehold Limited opens, I'm going to click on the News tab right here. Once the News tab opens, I go to the SENS. SENS stands for Stock Exchange News Service. So I'm going to look for a dividend announcement. Here we go. It was published on the 31st of October 2022. It says declaration of special dividend and finalization announcement. So if I select view, you'll see here it says declaration of special dividend. This was a once-off dividend payment. And what's important is the dates. So it says salient dates. Shareholders' attention is drawn to the following important dates. So the dividend was announced on Monday, 31 October 2022. Then last date to trade, meaning the last date that you can buy these shares to qualify for the dividend was Tuesday, 15 November 2022. Then it says date of payment to shareholders was Monday, 21 November 2022. Next, we're going to go to sharenet.co.za, where you find announcements for many companies and ETFs. So I have it as a shortcut, so I just click there and it opens the SA market and economic calendar. So where it says AGM confirmed, that's an announcement for an upcoming annual general meeting. So if you're a shareholder, email invitations are sent to you to attend the AGMs if you have invested in any of these shares, right? Where it says dividends paid, that's the date when investors will receive their dividends. So I'm very excited because this is an ETF that I invest in, the F&B Global 1200 ETF. It's actually paying dividends on the 28th of November. And then scrolling down where it says LDT, that's the last day to buy shares or the ETFs in order to qualify for the upcoming dividend. Now that you know all this information about dividends, you may be tempted to rush off to buy companies with the highest dividend yields that you can find. This is not a good idea because you will most likely fall for something called a dividend trap. A dividend trap is a very high dividend yield that is too good to be true and unsustainable. For example, if a company pays out a 7 Rand annual dividend and its share price is 100 Rand, the dividend yield is 7%. But if the stock price drops to 50 Rand for whatever reason, the dividend yield shoots up to 14%. If you don't do your research, you would look at that increased dividend yield as a good reason to invest without knowing that the share price has dropped or why the share price has dropped. Before buying a company, do your research about the financial health of that company first. Look at the income statements of the company. Is it making profit? Has the profit been increasing over the years? Check the balance sheet. Do they have enough assets to pay their debts? Check the cash flow statement. Do they have enough cash flow to cover the dividend? Dividends are only the icing on the cake. They are not everything. Personally, I am more comfortable buying shares of financially healthy companies with low or average dividend yields than financially unstable companies with very high dividend yields, because sooner or later, you will not only lose that dividend, you might even lose all your money if the company goes out of business. Lastly, let's talk about how dividends are taxed. How dividends are taxed depends on the type of dividend you receive and in which type of account you receive your dividends. If you buy dividend ETFs and shares in a normal South African investment account, your dividends are taxed at 20%. But REITs and property ETFs are not taxed at 20%. They are taxed according to where you belong on the SARS income tax tables. What this means is that those in higher tax brackets pay more tax for REIT income compared to those in lower tax brackets. If you buy dividend ETFs in a tax-free savings account, also called a TFSA, all your South African dividends are not taxed. And finally, if you buy dividend shares or dividend ETFs in international accounts like the US dollar account, for example, your dividends are taxed at 15%. If you want to start investing and you'd like guidance, you can get a copy of my ebooks for beginner investors that will guide you step by step from my online store. I'm going to leave a link to my online store in the description and comment section below. Okay guys, that's it for today's video. I hope you understand dividends better and will be able to look beyond just a high dividend yield when you are choosing dividend companies. If you have any comments or questions about dividends, please type them in the comment section below. I'm going to see you in the next video. Bye guys.